Good morning, everybody. Hey, welcome to this Wednesday, the 29th of May. Yesterday, a mixed bag. Today, we've got quite a bit of red ink as the NASDAQ hit an all-time high closing record yesterday, backing off of those numbers this morning. We'll talk about that and more when Dave joins us here in just a few seconds. Before we do that, though, let's not forget that there are so many things that are uncontrollable in our world. However, you can take control of your investment portfolio by knowing the amount of risk you have in your portfolio compared to the amount of risk you should have in your portfolio based on your current circumstances and how close you are to retirement. Give us a call at 863-382-0037 to schedule your core retirement analysis. And with that, we got Dave coming up next.
Sarah and the Peters there. It was Billy's birthday the other day. I'm trying to remember. I think he turned 50. It's 8:40 here, 20 now before 9. Time to check in on money and find out what's happening on Wall Street. Kind of a role reversal yesterday. Check in with Phillip Statler from Statler Financial Services in downtown Sebring and get his take on life. Phillip, good morning. Good to hear your voice this morning.
Hey, good morning, Dave. It is good to be here as we halfway through this last week of May, and I gotta say, Dave, the day is not going to start out well for the stock market.
I'm kind of looking at a lot of red on the futures. Yesterday was one of the ones that kind of made me sit up and take notice. I mean, for the last few weeks, we've kind of had what I've always called a flight to quality. NASDAQ got outpaced by the Dow as people were buying out the traditional smokestack and big companies. The S&P was generally up. As a matter of fact, we're now at a 20-year record in terms of the number of up weeks so far in the year for the Standard & Poor's 500. But yesterday it was completely the opposite. The Dow fell. Let me get to my yesterday closes. Dow fell by 217 points. The S&P 500 basically flat steady, up $1.33. And NASDAQ was up and set a new record at 17,019 points at the close yesterday. That's the highest it's ever gotten above 17,000. While the S&P was flat. It was kind of a flight away from quality yesterday. I'm kind of blaming some of that on our dear friends at NVIDIA, aren't you?
Well, yeah, I mean, NVIDIA, golly, I'm looking, and it's up to $1,139 a share, Dave. And I remember just last week it was below 1,000. So, yeah, it's just going crazy.
It really has. NVIDIA is now on track, if it keeps growing the way it's growing for the last few days, to cross the $3 trillion market cap number. And I think it's only been Apple and Microsoft that have crossed the $3 trillion market cap number before. That kind of puts them in pretty rarefied air for a company that basically is known for, well, really two chips, a video card and an AI development chip. I mean, yeah, that's almost as narrow as Apple's iPhone problem.
Yeah, that's right. It is a narrow product line that they have. Thankfully, at least right now, both of those are in pretty high demand.
Yeah, right now it's a hot product line, so it's not a bad thing to specialize in, but still $3 trillion. I mean, the number of companies that have crossed that is so doggone small, it just kind of makes you sit up and take notice. Bunch of mixed signals we're getting. You mentioned that the futures are pointing downward, but yesterday we got the consumer confidence number out of the conference board. I don't have the exact number, but they were expecting consumer confidence to be flat to down, and it went back up. Evidently, all the big money people spending big money at retail is improving our sense of confidence, even if we can't afford to buy diddly.
Well, yeah, it's that is an interesting read, and we'll see if that continues. I mean, just based on the mortgage applications and I think a lot of that is just because the market's been going up, and so everybody feels better when the market is going up. There's more confidence out there, and I think that may be leaning in on that number, Dave.
Might very well, especially if you own NVIDIA.
Yeah, exactly.
That's the driving. The other side of that coin, and you alluded to it, we got mortgage application numbers in this morning. Last week, mortgage applications fell another 5.7%. That we're almost used to, but the number that really kind of kicked me in the butt was purchase index was off by a little over 1%. Refinance index, and that you and I have both been kind of saying, okay, fine, a little downtick in the mortgage rates. People take those ARMs and refinance them in order to take advantage of the lower rate. Average mortgage rate did go up by 0.04% last week, but that tanked the refinance index down by 13.6%. Money's getting a little tighter, ain't it?
It really is, and we are seeing interest rates heading back up as well. I mean, the 30-year Treasury, even yesterday when we talked, was somewhere around 4.55, 4.58, and now we're almost 4.7. So, I mean, it doesn't sound like a big bump, but that's a 1/10% increase in interest rates, and when we're talking about interest rates, that's a big deal.
Yeah, over 24 hours, that's a precipitous increase. Might have been encouraged by the fact that our dear friend Neil Kashkari, one of the guys that actually votes on the Federal Reserve, he hit the rubber chicken circuit yesterday and said he wouldn't rule out a rate hike. Now, if you're buying interest-sensitive stocks, that's kind of like a small dose of strychnine, isn't it?
Yeah, it is, because small companies or those NASDAQ type companies are in growth mode typically, and so they borrow a lot of money, and so that interest rate, not like you and I when we get a 30-year mortgage on our house, they don't have that 30-year mortgage. Their stuff is a variable interest rate, and so it adjusts as interest rates adjust.
And as you and I have been preachifying now for a couple of years, it also impacts the federal debt as our federal bonds roll over as well. Because every time they roll over to a higher interest rate, and that means our federal budget is getting more and more out of control with the debt.
That's absolutely right. If you think back the last 3 years, I mean, we've seen probably, I don't even know what the percentage is on the short-term rates, but we were probably below 1%. Now we're at 5.25 on a 3-month Treasury. So you go figure what that means in terms of interest rates to the government.
Yeah, go ahead. Do the math on $33 trillion in debt. That'll keep you awake at night, won't it?
Exactly.
Absolutely. The other thing that's causing a little bit of, well, let's just say tentative attitude on Wall Street is the Beige Book comes out this afternoon. That's the big green eyeshade publication that really only the geeks read in detail, but unfortunately the Federal Reserve is full of geeks, and that's what they read before they get into their next interest rate setting meeting coming up in a few weeks, and that'll probably cause at least a little bit of seismograph in the charts this afternoon, about 2 or so, I'd suspect.
Well, as they parse through those numbers, the other thing that's coming out tomorrow, Dave, is we get the first revision of the GDP for the first quarter, and my expectation that I see across my board is it to go down. The original number was 1.6%. The analysts are calling for 1.2%. So a revision downward. That should be interesting tomorrow.
That would be a big revision downward, but I gotta believe that in the current environment of touchy about interest rates, that would be one of those bad news equals good news scenarios on the equity market, wouldn't you expect?
I would think from a Fed perspective, but I think they're going to look more to Friday's numbers when we look at the PCE indexes.
Yeah, that I think you and I both agree. That's going to be the seismograph event of the week as far as the markets go. We're toward the end right now of earnings season, but we're getting some household names that you and I both talk a lot about. And among others, I gather Dick's Sporting Goods had a pretty good quarter, didn't they?
They really did. They even had such a great quarter that they've increased their expectation for the year as we look at that. So as we come in, their same sales grew 5.3%. That's better than 2.4 that was expected. I mean, that's significantly better.
That's a big beat, yeah.
Yeah. Earnings beat by 35 cents a share, came in at $3.30. And revenue, went from 2.94 billion expected to a little over 3 billion expected. So, like I said, they did raise their full year guidance as well. They're up 7.75% this morning.
I guess I wasn't alone in buying new golf clubs from them last year, right?
I guess not. Guess not. Hey, one of your stocks, you may have to go buy some more cat food. Chewy reported as
Yeah.
well. They had a pretty good quarter. They beat by 11 cents a share, came in at 15 cents. Revenue above expectations as well, and so they're trading up 14% this morning.
That stock fascinates me on general principle. I've always said I've enjoyed watching the evolution over the last 20 years as people try to figure out how they can monetize the internet. And Chewy finding a specialty niche like that and doing it well and doing it right. I mean, their service is amazing. Prices aren't bad. And I mean, they've got a niche that works, and I'm glad to hear they're doing well, if for no other reason than the fact that my stray cats are getting pickier as they get old.
Hey, the last
I'm a pretty frequent customer. Can you tell?
Yeah, we also kind of teased this one yesterday. Abercrombie and Fitch, it came out this morning, and Dave, they had, I think, probably the best quarter they've ever had. Retail sales were up 22%.
Wow.
Yeah, way ahead of expectations. You know, they've been working the last 10 years or so on recreating themselves. They're not the same store they were in the 2000s during their heyday, for sure. But they did well. They came in earnings at 2.1% versus $1.74 expected. Hey, revenue crossed over the $1 billion mark versus the 963 million that was expected. So they are doing really, really well this morning as we get ready to open. They're up about 3%, 3.5%. So coming off a good quarter, looks good for them.
Given the fact that I was pretty well writing them off, I might not say that's more than a reinvention. That's a downright resurrection, I think, isn't it?
Hey, the other thing we've got two oil companies that are acquiring other oil companies. ConocoPhillips is acquiring Marathon Oil, and so that price tag is going to be about a $17.1 billion deal. The Conoco shareholders aren't happy about that. And then I saw that I can't find it right now, but Chevron is buying.
Stockholders approved Chevron buying out Hess as well now. So that's right. That's the second one.
Gotcha. So two of those came across the board today.
I hear you. Resetting the table, it was up on the tech stocks and down on the blue chips yesterday, 45 minutes before we open. Where's the red today?
Well, I'm going to say red's across the board, Dave. Really almost all the way across the board. We got the Dow down a little over 0.6%. That's another $248. S&P 500 is down about 0.7. That's a little over $36. And the NASDAQ 100 down almost 0.8. That's almost $147. Russell 2000 down about a 1.5% or $30. So everything's solid red as we get ready to start. Even on the other side, we got silver retreating 0.8%. Gold down 0.8% as well. And then dadgummit, Dave, we got crude oil up another 0.5% over 80 again to $80.22 a barrel.
Oh, gosh, I can't even give you good news on the overseas markets. Asian rim markets looked at our closes yesterday, and almost what you'd expect with an increase in the NASDAQ and a drop in the blue chips. Mainland Chinese markets were up. The rest of the Asian rim was off up to 0.75% yesterday. Once again, on the other pond, the European markets following our futures are going, woo! The overall European index is down about a full percent halfway through their trading day as well as they watch our futures sinking, and it doesn't look any prettier as I watch them update either. Getting a retirement handle means watching futures markets is not what you want to do. You need a plan. How do I get a hold of you to get a plan for my retirement, Phillip?
Exactly, Dave. That's why I developed the core retirement design to help people design that retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement analysis, or you can go to our website at statlerfinancial.com and click the link there to schedule your call. And then catch us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And you and me here again tomorrow morning, same time on Light. Thank you so much. We'll see you then.
All right, man. Have a great day.
Thanks, Phillip. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Hope your week's going well. I'll talk to you again tomorrow. Take care now.